So even the Amazon seller ecosystem, and these are third-party sellers, which are more than half of all of Amazon sales, even they are having problems.
Cathie Wood, the CEO of Ark Invest, stated in a recent interview that on-chain indicators indicate that Bitcoin is in the process of carving a bottom. She said, "It appears, based on our measures, that short-term holders have capitulated. That's fantastic news for putting in a bottom. Long-term investors have reached an all-time high of 65.7%. That suggests they've had Bitcoin in their possession for at least a year. We have some very strong holds or holders among us. That is also extremely encouraging, yet we may see some long-term holding surrender to signal the bottom." She said that, in addition to on-chain measurements, she is keeping a careful eye on the Bitcoin futures market, which she believes is indicating an increase in volatility for Bitcoin. She said that we don't know whether Bitcoin is going up or down, but we can see from other metrics in the market that suggest that the next big bout of volatility in Bitcoin will be to the upside. If you want to hear Cathie's comments on the crypto market, watch this video till the end, and don't forget to press the like button. Also, subscribe to our channel for daily updates. We post twice every single day. Now, let's look at her interview.
Just yesterday, I believe, Elon Musk said that he has a super bad feeling about the economy. And we're trying to figure out what he's looking at. We know his own sales were up. Tesla sales in the month of May, I believe, were up globally 60%, and almost every other auto manufacturer sales were down, and some of them down by a lot. So it's not his own sales, except perhaps at the margin, maybe something that he's seeing in orders. He may be reflecting on the decline in total auto sales. So that's interesting. Jamie Dimon at JP Morgan talked about a hurricane. Be prepared for a hurricane. He doesn't know what kind of hurricane. Is it going to be a mild one, or is it going to be a Hurricane Sandy, which would be quite serious? But I think he's changed his tune a bit in the last month since JP Morgan reported earnings. So what is he saying? Well, he sees a lot of business activity and must see it slowing down, if I had to guess. And the president of Goldman described this environment as a confluence of shocks that in his career has been unprecedented. So again, he has very good perspective, global perspective, every sector. And so I would say at the margin, these three business leaders are seeing the economy in some form of stress. Now, one of the issues we've been focused on with you on this video is the inventory buildup that was likely, and we'd been saying that through the last year, and it took a while to get through some of the supply chain issues, but now we are seeing inventory increases, the likes of which I have never seen in my career, and I'm talking about on a company-by-company basis. So Walmart sales up 3% on a comparable store basis year over year, which means they were probably down in unit terms. Inventory is up 33%, which probably means in real terms, taking away inflation, they were up 25 to 30%. Well, that's interesting because more than half of Walmart's sales are in groceries. And you're not going to see huge inventory buildups in groceries. And so what does this say for the other half? Are their inventories up 80%? It's kind of crazy to think that that's a possibility, but it's a possibility. And Target's inventories were up 42%. Now it has less in the way of groceries as a share of the total. So 42%, maybe if you X groceries, was up 50 to 60%. These are crazy numbers for two of the best managed companies from a supply chain management point of view in the world. And so maybe maybe a Jamie Dimon is starting to see this backing up in other ways, in terms of the way the information he has. Another very interesting story recently, this was in the Wall Street Journal, was one of the big Amazon seller aggregators. So basically pulling together a bunch of smaller sellers and aggregating them onto the Amazon network from a third-party point of view. In January of this year, this aggregator had planned to go public. It had such a booming conditions during COVID that it felt that this was a shift that would continue and that it could go public, and wanted to go public in order to continue to aggregate the seller ecosystem for Amazon. Well, he, instead of going public, the CEO decided the market conditions were a little hostile, but he still went ahead with the party he had planned in January. And so brought a bunch of the sellers down to Mexico. And I guess they were feeling very confident in January. Well, guess what? Just recently, that CEO was let go. They will not go public, and they may be in trouble, and they may be in too much debt. Again, so much confidence during COVID that, his business would continue to boom. So even the Amazon seller ecosystem, and these are third-party sellers, which are more than half of all of Amazon sales, even they are having problem after years of taking massive share from the brick and mortar retailers. There was about $3 billion of Bitcoin used as collateral. They had been building it up in the last month or so. And so we believe all of that was disgorged at one point. That's one reason that the Bitcoin has gone down from, in the last month, just from 40,000 to 30,000. Another reason is the high correlation with the NASDAQ. Now, interestingly, in the last week or so, that correlation broke down a bit. The NASDAQ had a few really good days. Bitcoin did not. So there's something else bothering Bitcoin. It is down 57% since its high at almost $70,000 in November. Its 200-week moving average is 22,000. So today we're at 29,000, I think. Its 200-week moving average is at 22,000 and rising. Now, the reason that particular number is interesting to us is we initiated our first Bitcoin position at, back then, it was the 200-week moving average. It was in the $225 to $250 range. So we've come a long way since then. But that has proven to be a nice support. So that's also interesting. A couple of other points I'll just highlight, and you can see in the report. It appears that the short-term holders, and you can see everything in this ecosystem. The transparency is amazing. It does appear, according to our metrics, that short-term holders have capitulated. That's very good news in terms of putting in a bottom. Long-term holders are at an all-time high at 65.7%. That means they've been holding Bitcoin for at least a year. We've got some very strong holders or hodlers here. That's also very good news. Although we might see some long-term holder capitulation to mark the bottom. And then the last metric that I'll feature, there are many more, is that the futures, Bitcoin futures, are selling at a discount to spot Bitcoin. And during those times, we expect volatility. Now, we don't know if it's up or down, but you can see from other metrics in the piece that our thinking right now, or our judgment call, is the next big bout of volatility in Bitcoin will be to the upside. Nonetheless, we are on guard. The Terra disaster, it was a fiasco for crypto, I think, in terms of raising or giving regulators even more incentive and reason to come in and regulate a little bit more with more of a heavy hand than we would anticipate